What's up everybody, I'm Jaspreet Singh, and ever since the 2021 cryptocurrency highs, Bitcoin and crypto has been on a one-way roller coaster down. While this is bad news if you're a crypto investor and you bought during the highs, it's great news if you're a crypto hater because all the crypto haters have been saying, I'm right, you're wrong. But if you're one of those people that believe in cryptocurrency and you like the idea of the blockchain technology and you like what this could do in the future, you might be wondering, should I buy the dip? The one factor that should not influence your investment decision is price. When you see a stock and you see it trading for $5 a share, that doesn't tell you anything about the underlying company. It doesn't tell you if it's a good company, a bad company. It doesn't tell you if it's been struggling or doing well. It only tells you what the price is right now. If you want to make a smart investment decision, the way that you do that is not by looking at the price right now, but by looking at what the underlying asset is. What does this company do? Is it doing well? How are the profits doing? How is the revenue doing? How have they been growing for the last few years? Same with cryptocurrency. If you want to make an investment in crypto, the first thing you got to do is ignore the price and look at the underlying technology. Look at the blockchain. Look at the value. Look at the use. Look at the network. Is this something that will have value in the future? Is this something that you believe in? If yes, then price helps you determine when you buy, not what you buy. I'm not saying you need to be a cryptocurrency investor. What I'm saying is you got to understand your beliefs. If you believe in cryptocurrency, if you like the idea of cryptocurrency and you want to invest in it, a low price is a great opportunity for you to come in and buy. If you don't like cryptocurrency, if you don't believe in cryptocurrency, if you think it's a scam, don't buy cryptocurrency. The unfortunate reality is that price typically has an inverse relationship as to when you should buy an investment. Now, I'll give you an example of this because back when I first started buying real estate, it was at the bottom of the real estate crash when you could find real estate for literally pennies on the dollar. And during that time, when I started buying real estate for under $10,000, under $30,000 in good areas, everybody, and I mean everybody, kept saying that why would you want to buy real estate? This is the worst investment that you can make. Real estate is the worst thing that you can buy. Real estate has made so many people bankrupt. It has caused so many foreclosures. It's caused so much hardship. You should not buy real estate. When I started buying real estate, I didn't have that much money. I mean, I was in college. There was a lot of people that I knew who had way more money than I did, but they chose not to invest in real estate because of the sentiment around real estate due to price. Now, what I understood at that time was the underlying asset, the real estate, had value. Price just meant it was a good opportunity for me to buy. It's the same thing in the stock market. Anytime you see the stock market fall, what happens? People start talking about how the world is ending. The stock market's going to collapse. The stock market's going to go to zero. If you don't believe me, watch any of my videos when I talk about what's going on in the markets when the markets are going down. Anytime you see that, you see people talking about how you need to cash out of the stock market and never buy another stock because the whole markets are going to go down. When in reality, down markets are the best time to buy good assets. The key word there are good assets. So now, if cryptocurrency prices are falling, it could be a great time to buy good assets. And this is where you have to decide, is cryptocurrency a good asset to you or not? And this is one of those things where it's speculative, right? Because cryptocurrency hasn't proven itself the way that real estate has. It hasn't proven itself the way that the stock market has. We don't know what's going to happen with cryptocurrency in 5 years or 10 years or 20 years. So it's that speculative part that everybody still has a question mark on. And the haters of crypto are saying, I told you so, crypto is going to zero. The crypto enthusiasts are saying, buy the dip. And this is where you have to now make a belief because we don't have the right answer. Now, I believe in cryptocurrency. I think that there's a lot of value in crypto. I think there's a lot of value in the blockchain technology. I think there's a lot of things that you can do with it, but I also understand that it's speculative. I also understand that it's risky. So I invest in cryptocurrency. However, it is not a major part of my portfolio. I invest in 5 things. I invest in my business and startups. I invest in physical real estate. I invest in stocks. I invest in cryptocurrency, and then invest in physical gold. And so I understand, okay, cryptocurrency is there. It's part of my speculative part of my portfolio. If it went to zero, it wouldn't affect me really that much. And I also understand that if cryptocurrency went to zero, I would be fine. However, I don't think cryptocurrency is going to go to zero, which is why I keep investing in cryptos. However, I do think that some cryptos will go to zero. I think that there are a lot of bad cryptocurrencies out there. I think there's a lot of crap cryptocurrencies out there. I was making videos about this when cryptocurrency was hitting its all-time highs in 2021. I said that we are seeing the growth of all these crap coins that I don't believe in. And so I think that is a part of the process, and I think you're going to see a lot of volatility. I think that we're going to go even lower. However, this is where now you got to make the right decision for yourself and understand how it plays a part in your portfolio and understand the long-term horizon. A part that I'm more worried about than all of cryptocurrency going to zero is the crypto exchanges, because there's a lot of crypto exchanges that fall under that traditional tech sector that have been a byproduct of this bubble economy over the last couple of years, and now they're struggling raising more cash. They're struggling staying in business. And the thing that you want to remember here is that when your cryptocurrency is on an exchange, you don't own it. And so if an exchange that you're using goes under, or if they lock you out, there's nothing that you can do. So if you are using an exchange to buy your cryptocurrency, make sure you take your currency out of the exchange. Use an actual wallet. A cold wallet is the best thing that you can do, which is a USB drive. I use a nano ledger. You can use a hot wallet at the very least, but you need to take your cryptocurrency out of the exchange. That way, exchange doesn't control the cryptocurrency. If you are looking for a good exchange to use, you can check out our sponsor FTX US. FTX US has really been a dominant force here because they've been the ones that are essentially buying up or giving cash to some of the exchanges that have been going under. So they've been growing in a lot of market share there. They've also bought a big chunk of Robinhood. And the nice thing about FTX US on your end is it's super simple to use. If you want to buy Bitcoin or Ethereum, well, all you got to do is enter which coin you want to buy, and then you can pick the frequency. Do you want to buy it once? Do you want to buy it once a month? Do you want to buy it once a week? You want to buy it once a day? I buy Bitcoin and Ethereum and a couple other coins every single day. So it's very simple. You can just set up the dollar cost average system and never have to worry about it. I like FTX US because their fees are so much lower than pretty much every other major brokerage out there. So more of your money can go to actually buying you crypto instead of just making your brokerage richer. And now, because they've been investing so much in their own technology, pretty soon they'll be launching the feature which will also allow you to buy and sell stocks right off of the app. Right now you can trade cryptos and NFTs, and pretty soon you'll also be able to buy stocks. And because you're a fan of the minority mindset, if you use my link down in the description below and then you enter in the referral code minority, they will also give you up to $20 worth of crypto for free when you trade $150 worth of crypto on their platform. So if you want to get that free bonus, all you got to do is use my link down in the description and then enter in the referral code minority. As we go through this crypto winter, the thing that you want to ask yourself now, if you want to be a crypto investor, is why are you investing in this cryptocurrency? What value does it actually provide? Does it allow you to transact easier? Does it allow you to do things, build smart contracts? Does this technology allow you to do something that does not exist? Because now what you're doing is you're not just investing in some random cryptocurrency that you hope will 10x because it has a lot of hype behind it, but now you're investing in a software. You're investing in a technology, and that's very different than what most people's perceptions of what cryptocurrency is, because the reason why I have so many haters on the cryptocurrency side is because most people assume that it's just a bunch of coins with dogs and cats on it that people are throwing their life savings into. And that has existed. And the reality is that's where all the crap is. But if you want the real value, you have to look at the blockchain, you have to look at the technology, and you have to look at the use. If this technology can provide real use as a software, if it can change the way that you transact, if it can change the way that you do business, now there's value here that people and businesses can use. And that can create an investment opportunity, but you have to do that research and understand what the value is. There is one X factor though, and that's government regulation. Because now as cryptocurrency has become much more widely adopted and much more widely used, the government now wants to get more involved on the regulation and oversight and monitoring it because they want to prevent scams. They want to avoid some of the bad trust and bad things that can happen with cryptocurrency. And this is where we don't know where this regulation will go. Just a couple of days ago, the last week of June, the founder of Cardano, the cryptocurrency ADA, went in front of the United States House and talked about why there needs to be more regulation on cryptocurrency, because if you do regulation the right way, it will make people feel more safe and more comfortable investing their own money into cryptocurrency because they don't have to worry about being scammed. They won't have to worry about all these bad exchanges. They won't have to worry about all these bad coins. However, if the regulations go the wrong way. If it gets overly regulated, then that can very much hurt the cryptocurrency market, because now it becomes harder for people to buy and sell cryptocurrency. It becomes more difficult for people to develop technologies with cryptocurrency, and it becomes much more harder for people to actually use and develop the cryptocurrency here. This is where you have to understand the difference between a short-term and long-term thinking. I am not a short-term investor. I'm not a trader. I'm a long-term investor. And by long-term investing, I mean I look at the fundamentals, something that I believe will have value in the long term, and that's something that I want to invest my money in. I think that there's value in the blockchain technology over the long term. However, in the short term, there's a lot of factors that are going to influence cryptocurrency and the rest of the markets. For example, the Federal Reserve Bank, because now we are on this rate heightening cycle. The Fed wants to aggressively raise interest rates to fight inflation. As they raise interest rates, that pulls money out of the economy, and that makes people less interested in speculative investments. What's a speculative investment right now? Cryptocurrency. So as interest rates go up, you can expect that that's going to continue to hurt the cryptocurrency market, because one, it makes less money floating around out there. When there's less money floating around out there, that just makes asset prices go down, and cryptocurrency is one of those. And especially when it comes to speculative investments, people want a safer investment when you go through these types of rate heightening cycles. So just naturally in the short term, you can expect that if the Fed is raising interest rates, it is going to continue to hurt cryptocurrency. That's why in 2020, when the Fed started cutting interest rates and we started seeing so much stimulus, we saw billions of dollars flow into the cryptocurrency market. Now, as we're doing the opposite, as the Fed is working to raise interest rates, the Fed is working to pull money out of the system, billions of dollars are leaving the cryptocurrency markets. And this is where now you want to find the right opportunity for you, because if you believe in crypto, like I said in the beginning of this video, if you believe in the technology, you believe in the value of this thing, and you want to hold it for the long term, and you really do believe in it, well then a low price is just a great buying opportunity. But you have to remember that long-term mindset and be able to understand what it is that you're investing in. Because when you go through these rate heightening cycles, when you go through an economic contraction, you see a lot of blood in the water. You see a lot of panic. You see a lot of fear. However, no smart investment decisions are ever made out of fear, and no good financial decisions are ever made out of panic. And this is where you have to be smarter and be able to control the psychology of investing. That's why I always say that the psychology of investing is just as, if not more important than the actual education of investing, because that psychology will allow you to control your emotions. Cryptocurrency is liquid, just like the stock market. And so you can see people panic and sell out of fear, because now as we go through this time, we're going to see more exchanges start to struggle, which means people will not be able to pull their cryptocurrency out of their exchanges. This could cause cryptocurrency to go down even more. This could cause some cryptocurrencies to fail. And when that happens, that can cause more fear, more panic, more of the whole anxiety around the cryptocurrency space, because it is one of the most speculative out there. And that can create a huge downward spiral, which could create a huge buying opportunity, again, if cryptocurrency can demonstrate its use case for the long term. And this is kind of the mindset you have to understand. You have to understand the game and understand what is your investment strategy. Are you investing for 6 months, a year, or are you investing for the long term? Because a long-term investor understands that when there's blood in the water, when there's fear, it creates the most opportunity for you. The last thing that I want to say in this is you don't always have to be right to make a lot of money, because sometimes that right changes with time. And what I mean is, if you bought into cryptocurrency in 2020 at the bottom, when the crypto markets and all markets were crashing, well, if you held on to that through the year 2020, you would have made a 600% return. Now, at that point, you might have said, oh, crypto is going to go straight to $100,000, but it didn't. However, if you sold, you made a lot of money. And so what happened after 2020, from 2021 down to where we are now. And so you don't always have to be always right. But who's right is going to change, because now all the people who are claiming they're right are the people who are saying crypto is a scam, crypto doesn't do anything, it's a Ponzi scheme. But if you had bought crypto at $5,000 or $3,000, well, you're still up even at today's price. Now, this is where the definition of right is going to change, and the definition of right is also going to change with time. And you have to understand how these things play out, because it happens across asset classes. You look at the 2000.com bust, that was when all the internet haters came out saying, oh, you were wrong to think that people want to shop on the internet. No one's going to ever want to spend their money on the internet. People want to go and shop in stores, the retail brick and mortar. here we are today, 20 some years later, and you can see how that played out. They were right for a period of time, but then that changed over time. In 2008, it was the same thing with the real estate market. People said, oh, I told you nobody wanted to be a homeowner, that homeownership is a scam, that banks are a scam. And for a period of time, they were right. People didn't want to be homeowners. They were scared to be a homeowner. But then that changed. It always changes. And you have to understand that we go through these types of cycles. And unless an asset class is absolutely going to zero, like it's going bankrupt, well, then there's time and things can change. And you have to understand that because you have to be willing to weather the storm, especially when you're talking about more of a speculative investment. If you enjoyed this video and you want to see how you can make money now that the everything bubble is starting to pop, I made a video covering that, and you can watch that video by clicking this button right over there. Thank you for watching, and as always, keep hustling. I'm not telling you not to invest in any of these asset classes. What I'm telling you is just to understand how these markets work. That way you can find the opportunities.